But let's now shift the focus as promised on IndiGrid to begin with. In fact, to just begin with, let's have a quick look as to how the earnings panned out for the IndiGrid Trust, with revenue panning going up by as much as 27%. Some sort of expansion also reported on the EBITDA margins front. EBITDA in absolute terms registered a growth of 3% on a year-on-year basis. But as far as the bottom line goes, the profit is down 34%. Now, in fact, let's first go across to Mr. Harsha Shah, CEO at IndiGrid Trust, to try and understand as to how the quarter has panned out and try and also understand how the company is positioning itself for the times to come, for the quarters to come. First up, well, thank you so much for joining, Mr. Shah, and it's always a pleasure having you on the show. First up, if you could run us through the key highlights. As we read out at the outset, you know, while at the face of it, it looks like a good result, but the bottom line, in fact, has taken a hit to the tune of 34% when you compare your earnings on a year-on-year basis. What really has worked for you this quarter and what hasn't, if you could run us through the highlights?
Okay, thank you for having me on the show today. I think, as you rightly put it across, I think we've got a phenomenal quarter of financial performance where our EBITDA has expanded, performance has improved, and we have had one more quarter of a consistent performance on EBITDA as well as cash flow. One thing which I would say is differently is that IndiGrid is a yield platform. We distribute based on cash flow. It's an InvIT, unlike a normal company which needs profits to give dividends. We distribute distributions based on the cash that we earn. That is the fundamental difference versus a normal company. And therefore, more than the PAT, what is important is what is called net distributable cash flow, which is the cash flow earned during the quarter, which is substantially up at 140 crores for this quarter, and we're distributing 175 crores on a wider base, which is 3 rupees a unit. So a better metric to evaluate IndiGrid or any InvIT for that matter is either EBITDA or the cash flow earned during the quarter, which is net distributable cash flow. Both of them have seen substantial increase on a quarter-on-quarter basis as well as on a year-on-year basis on the back of two acquisitions which we recently did. And based on that, what we have guided the market towards of giving a 3 rupees a unit distribution. We are maintaining that guidance even on a wider unit base, which would mean that we are distributing 175 crores of cash flow this quarter to investors. And on an annualized term, our guidance is to distribute 700 crores this year. So I think we are well on our target to achieve that and executing strategy on that front.
All right, Mr. Shah. In fact, there's one exceptional item which clearly needs an attention, and we are referring to the impairment charge of rupees 49 odd crores. What is it? What does it pertain to? And if you could give us an explanation on that, because that seems to have taken a hit on the bottom line for you.
Sure. So I think, see, we own long-dated project assets, especially transmission assets, with a fixed annuity cash flows without any variability of traffic or price. What happens with that kind of assets is that we do fair market value of assets and keep it in the books. In case there are movement on interest rates and the fair market value is different, we provide for it in the books of accounts that our value of the asset has gone down to that extent. And that is what the charge is. It is a non-cash item, and per se, business has no impact of that on a regular basis, or not any expenditure has increased on that account. It is just a fair market value assessment and accordingly taking a hit on charge. If in case interest rate were to go down, this charge would be reversed and considered to be a charge back. So it is nothing but an accounting movement of fair market value.
Accounting movement is what the impairment charge of 49 crore pertains to. Moving on, Mr. Shah, you just mentioned of you acquiring two assets in this quarter. Now, what is the kind of contribution that one can expect from them from the September quarter or you know, for the times to come?
Certainly. So I'd say that we have doubled our distributable cash flow in this quarter itself. So we distributed in quarter one about 85 crores to investors, which was pertaining to a particular unit base, which was 3 rupees a unit. Post this acquisition, we have doubled the unit base and still distributed 3 rupees, which is 175 crores of distribution a quarter. So in a way, we have doubled our distribution. Similarly, even our quarterly run rate if you look at without these two assets, we have almost doubled the quarterly run rate what we'll earn. This quarter was a mid-quarter acquisition, and therefore the contribution is relatively only for part quarter for both assets, different dates. But from next quarter, where there'll be a full quarter EBITDA contribution, it will double our EBITDA versus what it was before.
All right, so quite potential as far as the latest acquisitions concerned. If you could also help us understand which assets are getting commissioned and what impact they will sort of have on your revenue over the next, say, 4 to 6 quarters.
Okay, so first of all, we only buy operating assets and not under construction assets. These two projects we signed up, which were completed, and they add to the contribution of a portfolio. We also signed agreements for 4 more assets with Sterlite Power to acquire as and when they are completed over the next 4 to 6 quarters. In together, we acquired 5,400 crores of assets now. There's another 6,500 crores of assets which we will acquire over the next 4 to 6 quarters under something called framework agreement as and when these projects are completed, which will allow us to increase our distribution and EBITDA margins as well as cash flow earned along the way.
All right, and one question, in fact, a very important one, talking of your bid pipeline visibility, which you know is around 9,200 odd crores. Correct me if I'm wrong there. Now that is a pipeline that we're looking at. What is your expectation on that front, and what is the plan in terms of execution of them?
Okay, so see, we believe that power transmission sector is backbone of country's efficient electricity market. With One Nation, One Grid initiative and all what is happening with renewable energy in the country, we believe transmission line investments will continue to grow. The pipeline that you see is just a few projects that we are there for bidding. And our sponsor, Sterlite Power, won 3 projects recently in the bids, and we see that continue to increase. What would happen for us is that it will become a pipeline when these assets are completed. As I said, we only buy completed assets, we don't buy under construction. The winners of these projects and investment that happens in transmission sector would look to monetize those portfolios with us over the next 3 to 4 years. So we see a very compelling trend for us to achieve our growth vision of 30,000 crores of AUM on the back of what we have today, about 10,500 crores assets, which is almost triple than what we listed at. Another 6,500 crores of framework asset where we have signed agreements to acquire them, which takes us to about 17,500. And the next 12,000 crores we will look to acquire from all the incremental investment that happens in the sector once the projects are completed.
All right, one final question before I let you go, Mr. Shah. It will be on the transaction, the KKR transaction, in fact, which you also referred to in one of the notes. How does it change your growth profile and, in fact, the visibility of the business as a result of this transaction? If you could provide us a few granularities pertaining to the transaction.
Oh, sure. So I think it completely changes the growth profile that we envisage. There were 2, I would say, when we started IndiGrid listing, the first IndiGrid listing happened, there were 2 key considerations for investors to trust. One was that our ability to acquire assets, which we have proven very well over last 2 years. We started with 2 assets and today we have 8 assets, and we have grown our portfolio 3 times in terms of assets under management. The second was that would IndiGrid be able to raise capital, which is equity capital, which fuels our growth. And we have done that in this quarter with raising capital from likes of KKR as well as GIC and other capital market investors, which proves the platform and our ability to raise capital and investors' interest in investing in us, which again allows us to grow more. So what this investment will do for us is provide us visibility of capital for acquisition of new assets as we go along the way.
All right, Mr. Shah, thank you on that note. It was a pleasure to have you on our show at the Business Television India. In fact, that was Mr. Harsh Shah, CEO of IndiGrid Trust. In fact, the company did post a good quarter, barring the bottom line, which has taken a hit of as much as 34% on a year-on-year basis on account of the impairment charge of rupees 49 crore. But as you just heard from Mr. Harsh Shah, he was quite optimistic of the kind of potential that the company has of in fact, tripling the AUM that they currently operate with. All right, now moving on from the IndiGrid Trust to GSCL.